Sorry about the other time. I didn't know my mic was mute. I was sneezing, so I don't want that to affect the video. So I think the expansion phase was what I was trying to explain before the that I think this is the second part of understanding price. And we'll look at examples, just few examples. And I think our next video is going to be on institutional reference point. This is still part one for price. I'm still going to discuss more in depthly on price. That's when I've discussed a little bit about institutional reference point, and that's where you're going to understand what order block is, what FEG, liquidity pool, old high and old low breakers. Those are those things you understand on the institutional reference point, but I have to mix it with price, understanding price delivery also. So I think both will come hand in hand. So this is the part one, just the second part of the part one. So the part two will come up later. So on the expansion phase, I was talking about expansion. Said expansion is when price move quickly from a level of equilibrium. And the importance of expansion is when we see a price leave a level quickly, and this indicates a willingness on the part of the market maker to review their intended repricing model. And what you see when an expansion occurs is what an order block, which is what sponsors the expansion move. So, and not just the order block, the equilibrium also sponsors the expansion move. So, price leaves a place whereby you see price come into what leaves a level quickly, and this indicates a willingness to be part of the market leader to reveal their intended pricing model. So we see this often happen in the market in the second phase of the market. Is a phase. So when you see an expansion happen, then a consolidation has already happened. An expansion doesn't just happen on its own immediately. It doesn't happen on its own immediately, just like that. So you'll see an expansion happen based on what has happened. That is, when I explained three things price, what we should look at before looking at the charts, at the beginning of the week. So I explained that. So price has actually consolidated before an expansion happened. So, and it's coming from either the equilibrium, 50% of the equilibrium point of the consolidation, or it's coming sponsored by what? An order block. So what you see in an expansion is an order block. Now I'm going to show you a pictorial picture of that. Yes, a pictorial picture of an expansion. Yeah. Now I said the consolidation part. This is when price moved from what? It moved into this consolidation phase. Now, this is a particular phase. Then when you see price coming out of that phase, you see that it will be sponsored by what? The 50% or what? The order block. And this caused the expansion to move over 100 pips in the market. So this is what you will see majorly in the market. I've explained it here also. I use this diagram using the 50% equilibrium both on consolidation, and you see it also an expansion. Now going to retracement. A retracement is when price moves back inside the recent created price range. The importance of retracement is when price chooses to return into the recent created price range, and this explains how smart money is showing tendency to reprice to a level not efficiently traded for a fair value, and a fair value, that is a fair value gap and liquidity void, are the major sponsor of retracement. I need to correct this. A fair value gap a fair value gap and liquidity void fair value gap, and a liquidity void are the major sponsor of the retracement. So you will always see price when price move after an expansion. The next thing you should expect is what? A retracement. Now, a retracement might occur based on what happened. That is when price creates a fair value gap or a liquidity void, and you will actually see price will actually do this. I think I need to do. Price will actually need to do this. Maybe after you see consolidation, I've explained this. You see an expansion to the downside, then this. Okay, I need to do this one more. And an expansion to the downside. So when you see this expansion to the downside, price will create what? An inefficient price action, which I will explain later. That is a fair value gap, a one-sided market whereby you have just only the sellers. And what sponsored that phase of the market is a fair value gap. So you see price coming to a fair value gap will be created inside maybe 50% or below the 50% or above the 50% of this range, then or a liquidity void whereby you will not even see any buyers here. Then you see price what come into that retracement to continue the expansion downward. Do you understand now? To consider, that's why I said different phase of the market, you must understand it. You see that after this consolidation, we have an expansion, we have a retracement, we have another expansion. It is hardly will you see that after this expansion, you understand, after this expansion like this, then you have a reversal. Just immediately like that, there is something that sponsors the reversal. There will always be something that sponsors the reversal. So I think I need to show you a picture of this. Sorry, a minute. So let me delete that for the retracement that I just explained here. Okay, I think it's here. Retracement is nearby. So it's something we need to you have to go back, understanding price delivery, understanding each phases of price in the market. Yeah, this is a retracement. Now, this is a what? Retracement. You see price after the consolidation. This is a free consolidation. See the expansion. Look at the retracement. It's immediately after this immediate move, price retraced into what? This liquidity void. This is liquidity void to balance what? To balance the market. That is to make sure there is the involvement of buyers. There was no buyers here. It was just sellers, as I've explained beforehand now. So I think I need to go to the next. Now, reversal. Now, this is where most people have majority of their mistakes. And reversal is when price has to move in an opposite direction of the current price. The importance of reversal occurs when price shows that smart money is ready to run a level of stops whereby a significant move have to unfold in a new direction. Now, the liquidity pool above or below old price level are major drivers of the phase of a reversal. Now, I think that is when you see a reversal happens majorly around liquidity point, major liquidity point, and which will be taught. I've not taught you about liquidity. These are concepts you need to understand. Deep concepts. If you understand just reversal, you are good enough to trade the market. If you understand just the retracement, you are also good. But it's good for you to understand the four phases of the market to know where price is what's coming from and where price is likely to go to and where price is at presently. Those are the three things you need to understand price within the context of what this trade setup. Now, a reversal comes this way majorly A reversal comes this way. A minute, please. Now, sorry. A reversal comes this way. You see price trending upward, trending downward, trending downward. This is how price moves majorly. Then you see price immediately does this. Wow. Okay. I think I need to do it more efficiently. So we have seen a bullish move. We have seen a bullish move this way. Price is still bullish, going for liquidity. And immediately we see this higher reversal occur. And then a reversal can take an old high coming into this. Then you see it. That's a reversal. This is an old high. We thought we are selling here, but price still went above, taking this high, then dropping. That is a reversal. This is how a reversal pattern occurs. Now, I'm going to show you a pictorial form of a reversal. Now, look at how you see this. You see that in the opposing direction, price was reversed here. That old high has to be taken out. Look at this also. An old low has to be taken out in the opposing direction. Are you seeing this? Are you seeing this? That is how reversal occurs. This is a picture. This is one of those examples I see what laid down. So I think I've done that. I've explained this. You can screenshot this, write this somewhere. Okay. Yeah, you can get this, write it somewhere. I hope you took note of everything here. As one of the major things, write everything that is being taught. I believe you understand it. You understand it clearly. So let's go into a very few examples. Okay. I think I need to delete this. Okay, let me do this. Don't let me delete it yet. Okay. I think I have one here. No. Yeah. Good. Now, for example, now are you seeing this? This is a consolidation phase. I want to start with consolidation. I want to look for a place whereby you can clearly see. This is a consolidation phase. Now, I think I need to draw this out. This is a consolidation. An example of a consolidation. Are you all seeing this? Now, I told you it's been sponsored. A consolidation is being sponsored by 50% of the equilibrium or what's an order block. Now, let me show you the 50% of the equilibrium from here to here. From here to here is the equilibrium. It's a consolidation phase. Okay, so now we can see that that's the consolidation. Now, when price expand, we saw what price expand and what retraced into what? Into a 50% of the equilibrium, and these are also an order block. So this is an example of a consolidation. I'm going to show you more example of a consolidation. Example. Now, are you seeing this? Are you seeing this? This is a consolidation also. Sorry about that. This is a consolidation also. There are more examples. Why is my chat doing this? Wow. Okay. I think I should just use the 50% of this consolidation area. Wow. I don't know why my system is doing this. Okay. Trying to, the consolidation started all the way from here, but this also, because price is fractal, price has taken this low, so we are consolidated around this place. We consolidated around this place, and that's what I'm looking for. Well, I think I need to reset this. Let me restart the system. Okay, so like I've explained here, and I've explained how our expansion is being sponsored by what? Another block. 50% of the equilibrium. That's how our expansion is being sponsored. And we know it in the consolidation phase, the 50%, the equilibrium has to be drawn out so that when an expansion occurs, price goes either into the 50% of the consolidation to push price upward or downward, or find what? A liquidity level, or find another block, another block to sponsor the expansion. So to sponsor the expansion at this stage. So okay, I think this, okay, not this. So I was explaining this. Now, if our presently price is in a state of consolidation here, the price is still in a place of consolidation here. Looking at the 4 hours, price hasn't really done much around this period. This is what I'm looking at here, but let's see what I was trying to explain here. Yeah, yes. Now, are you seeing this? This is a consolidation phase. Now let's go into an expansion phase. I want to show you how an expansion looks like. This is an expansion. What looks like? This is an expansion phase. Look at where you see what? You see major push to the upside. And what sponsors it? Another block. Another block will always sponsor that. There are many examples I have shown you here. This is an expansion phase. Coming. I'm looking for a way consolidation happened then. Okay. Look at this. 50% of this range is where you have what? Trying to delete this. Now, this is a consolidation phase. This phase is a consolidation phase. Now, let me draw it from here to here. Now, are you seeing that? After this consolidation phase, we have an expansion being sponsored by another block. There's another block in other time frames, but still created additional other block here. Are you seeing this? Create an additional order block. Now, a retracement. This is an example of a retracement. After this expansion, are you seeing this fair value gap? This is an example of a retracement. It's been sponsored by a fair value gap, which will all be taught. It's been sponsored by a fair value gap. This is an example of a retracement sponsored by a fair value gap or liquidity void. Just only the buyers are there, no sellers in this candle. That's why price came to reprice this level. And now an example of what? A reversal. Now, when price did this is an example of a reversal. You can see price clearly taking an hold low. Then what? Push up in opposite direction. Are you seeing that? The same thing again. Reversal. Example of a reversal, which I will go in more detailed after checking the chart. We'll check the chart in the next class. That's when I've explained every reference point. Then we'll look at these phases of price one by one in-depthly, and you understand how price moves. This is a reversal. So I believe you understand this class, you understand this concept, you understand price now, and hopefully you be able to anticipate your anticipatory skills when you increase more, when you understand all of this. So this next time, that will be next time when we'll be talking about institutional reference point. We're talking about price delivery, looking into the specific things you need to understand that sponsors price, the institutional reference point that sponsors price, looking at those intricacies of why price doesn't move in a particular way. Maybe after a consolidation, we're expecting an expansion, and the expansion didn't really happen immediately. You understand that part, and I believe our anticipatory skills will increase more. The next time on this, have a wonderful trading journey, and study hard. Go through the videos over and over and over again. Wish you best of luck. Thank you.